Hello, everybody. So we are going to be continuing our series, been kind of looking at a particular, pardon me, a particular stock, and apparently making terrible decisions about it as I go along. So I'm going to look into it a little bit more with everybody. Really kind of curious how the and what made the stock move. So this was the original options with making it look like everybody thought it was going to go to 52. And this was updated the next day. Still, everybody thinks it's going to go to 52. This is where it was at. And like I said, it always has a sharp open. And was it a sharp open to the up or the down? Down, down, down. You see, this had a bloodbath yesterday, and this is today. So it made some recovery. It opened very strong and then immediately crashed, which was interesting. So one thing I was looking at is there's a lot of factors affecting the stock. I won't go into it, but it's a top to bottom company that does extracts a resource and not only sells the resource but also does value added production with the resource, without going into exactly what the company is, because I don't want anybody to ever buy something I'm talking about and then they have a terrible, terrible problem and it goes badly for them. So it went down and it's now down around 46. So I did a little more looking, and there is a theory that sometimes the market makers who sell all of these options, and I did a purchase of the actual stock, not options. I don't think I'm not sophisticated enough to understand options and don't think I would ever want to go into options. But it is good to be aware, and I'm trying to expand my understanding of stocks, and my current road that I'm going down is how do the options market affect the actual stocks, or do they or don't they? So there is a commentator I like to listen to. Let me go in. I would say one of my favorites is Real Vision. Real Vision has a lot of fantastic content. You should check them out on YouTube. They also have a subscription service where you can get additional content, which is very good as well. So Real Vision. Another one I really like is Maverick of Wall Street. He has a lot of interesting stuff, and he actually goes in depth into the options markets. And I always wonder, why is he going so much into the options markets? And I think it is because he feels that what's going on there will move the price. So what do you see? He has an expression called maximum pain. We have options expiring tomorrow. So you see this stock today was at 46.45 and was even continuing back into an uptrend after hours. So 46.45 moving to 46, what did I say? 46.70. So looking at the options, you can see it visually. Right now we are right here. So the Maverick of Wall Street would probably say we're going to go for maximum pain. So maximum pain would be right here. So it may continue up a little bit, or it could continue back to the downside somewhere in here. So what would maximum pain be for options is you look at 52, $52, 7,315 contracts. And each of those contracts, if I understand it correctly, and please leave in the comments if I'm incorrect about this, I think each contract is worth 100 actual stock certificates. So each of these one is actually need to be multiplied by 100. So that is a lot of open interest, 7,315 contracts to buy 100 shares. So, or sell 100 shares, because they're also adding in, I'm looking at the totals here. So maximum pain would be letting all of these contracts here that thought the price would be at 52, and the price is currently at 46.45, and it was way up there. A couple days ago, it was well within reason that that could have gone to 52, especially if you look at the price action and where it had been. So there's a lot of things going on that are behind the scenes. So you can't just necessarily put this on a massive manipulation to drop it before the options expire, because like I said, this company extracts a resource and then does a lot of value added to that resource. So it's what do you call it? Vertical integration, where they control from pulling it out of the ground to actually producing a finished product. So their natural resource had a substantial crash in its value. So that could 100% account for the drop in the stock price, because you'd naturally say the resources they have are worth less. And there's also a lot of other macro events. China is starting to come back online. You have to kind of look through the news. China had a thing where they were not importing Australian coal, and the coal they were using from other countries, if I understand this correctly, some of their power plants wouldn't even burn it, and other ones would burn it, but it would cause havoc with the power plant and need to be, I guess, rehabbed after the dirty coal was burned. So they are increasing mining. There was a lot of raining, though, so I know some of those mines a few weeks ago were flooded or at least shut down. So it's a very complicated series of events going on with this particular stock here. So we'll keep following it. If we are going by not withstanding the impact of the resource that they have as part of their, I don't know what you'd call it. It's part of what they own. They own natural resources in addition to producing a value-added product, many value-added products from that resource. So if you're going by the maximum pain idea, then Friday, which is the expiration of the options, the easiest place to move that price from 46.45 would be to move it slightly up to 48. The other thing I was going to say that's complicating this is the company is doing share buybacks. So it's possible there are share purchases going on. There's a whole nother story about if a company needs to buy a bunch of stocks, sometimes there'll be some interesting things that happen with the stock price to kind of stomp out people with stop losses and make a tremendous amount of shares available at a lower price. So anyway, lots of different videos about kind of interesting, looking at a stock price and seeing a sharp move, something like such a sharp down and then back up. Moves like this will stomp out stop losses and make a lot of shares become available, and then it'll resume its trend. So this one was very interesting right here. Somebody dumping a tremendous amount of shares and then instantly it came back. They'll also heard stories of, people are shorting something, then you'll have a massive spike to stomp out people. So anyway, it'll be interesting to see where the movement of this will go tomorrow. Will it continue recovering? Because you see it had been up in this range here in the 49 area and had even had massive spikes up into almost the $58 area. So it's going to be interesting to follow this one through options expiration. There's going to be a lot of people probably who are not going to realize this 52 price because we are currently down around here. So you'll see that at $48, there's only 700 contracts that shares have to be purchased or whatever to furnish to people. And even better, I'm hoping not because I have a little money on it, is it would be down around 45 or 44, where you only have a very small amount of um, shares that have to be purchased to redeem and make a good on the options. So we're trying to look at a lot of different factors here. I think we're going to shut it down now, but very interesting to see this play out and see where it's going to close for the options closing out. So I'm trying to find correlations between people placing bets on whether price is going up or down in the options market, and does that actually affect the physical stock price, because it technically should. And please leave in comments a better explanation of this. I'm going to do a little more research, but I believe based on where shares are, they either have to be bought or sold as things come closer to be, I believe it's called in the money. So things will be in the money between 46 and 47, or even it could go way down tomorrow for all we know. And that would be a lot less stocks that have to be purchased to fulfill options. Whereas if the price came in at 52, there would have to be a tremendous number of stock that would have to be bought at that price if it closed at 52. So we will see. I'll do one more update video on this, and we'll see how it's going to close out. This one's really hard to call for being manipulated because we have the resource price coming into play. You have options expirations where a tremendous number of options are going to be expiring out of the money. You know, we're looking at, that's almost 10, 11, 12,000 right there. If it stays below 50, I mean, you just add in a tremendous amount of options that are not going to have to be having stock purchased if it closes down in this range down in here. And then you also have the company itself doing stock repurchasing at some point. So it's very complicated. We'll see where it goes from here. Hopefully it'll make a recovery back up into this area around here. 48 at least would be very, very nice. So some tips to make sure you don't have serious problems is, I've always heard, you never make anything over 5% of your portfolio. And that'll protect you from massive movements like this and that. So anyway, we were hoping it was going to go up from here, but instead it went down big, and then today was a day of slight recovery. So we'll see where it ends up at, and I'll do one more video to close out the series to watch how options contracts may affect stock price. A lot of people were betting on 52. That's where the majority was, but that's probably not where it's going to close out at. So we'll do one last update. Thank you very much, everybody. Thank you, and have